All right. Welcome, everyone. Welcome to the launch party. Wow, that was quite an AMA with Crypto Kudasai JP. That was that was
Yeah, it was
really fun.
awesome. It was awesome.
Yeah, amazing. Big shout out to the Japanese community overall. They've really shown up here.
Yeah, I don't know if anyone from that community is now jumping into this AMA as well, but two AMAs in a row. It's a exciting day of vaults.
Very fitting for the launch party.
Exactly. Hey, Arta.
Hey Simon, hey everyone.
Hey, hey. All right. Let's kick this thing off, shall we? So, welcome, everybody. Thank you for joining us on this historic day where we celebrate the Volts Protocol Alpha launch on mainnet. So today we're super excited to demonstrate the app in action and turn this into an AMA as we just mentioned. We're also going to hear some cool insights from the labs team on how the protocol came to life and what the future might hold for Volts. So there is a community called chat channel. That's where you're going to go ahead and paste any questions you see there. Try not to put too much noise in that channel. Let's just keep it for questions so that the questions don't get drowned in GMs. That would be awesome. Um, so yeah, let's dive right into this. Why don't we? I want to bring up Simon here, the Volts co-founder. Of course, you guys know Simon, and just ask a few questions to kick us off. So hello, Simon, GM, and welcome to the party.
Hey, Will.
So why don't we start with you just telling us a bit about how the idea for Volts came to fruition and how you identified this unmet need in the DeFi space?
Yeah, sure. And obviously, for anyone that's heard this before, kind of forgive me for repeating it, but I think there's probably quite a few new faces in the community. So Archer and I really like when we started out, we went through what we would describe as or took what we describe as a research focused approach to try and unlock what we felt was going to be the next zero to one innovation required to move the whole sector forwards. And that 6 months of research, or it took 6 months rather in total, that really broke down into two very distinct parts where the first 3 months was very macro focused, so figuring out what we felt that next zero to one innovation was, and that's where we kind of landed on interest rate swaps, and I can talk to the significance of that in a minute. But then the second 3 months was very much kind of trying to figure out how on earth do we build this type of market in a world where the constraints are fundamentally different to the only other example that exists, which is in traditional finance. And that obviously it was not an insignificant piece of research, but ultimately it was off the back of those 3 months that we kind of landed on the mechanic that led to Volt's protocol, which was obviously then launched on mainnet last week, which is pretty exciting.
Yeah, absolutely. And if I failed to mention that, that's what we are celebrating here today. Last week we had our historic mainnet launch, and I mean a lot of work went uh, into this. So maybe I can turn it over to Arthur. What was your do you have anything to add to Simon's notes about just the journey to hitting this milestone?
Yeah, sure. I guess the main thing that we wanted to solve for is we kind of went backwards from the problems and the use cases that we've kind of identified, and at this time, I think last year, a bit maybe earlier or later, we kind of discovered that there was kind of no capital efficient way of expressing views on interest rate movements, and there was kind of no way for people to kind of conduct traditional kind of financial operations such as kind of variable liability hedging and the creation of kind of fixed rate markets and the kind of sustainable yield curve, which are kind of fundamental building blocks of a kind of traditional financial markets, and we kind of expect them to also transition into DeFi and disrupt the way kind of they're implemented in finance in general. And that was kind of the the main driver, and that then eventually led to the mechanic and all the kind of nuances that we uncovered in the process of research.
Yeah, awesome. So, I mean, obviously the impact of bringing interest rate swaps to DeFi long term is just huge. I mean, we often hear this quadrillion dollars in notional traded in traditional IRS markets. Um, but I want to focus a little bit on kind of the short term, the medium to short term. We have a lot of potential builders in here. A lot of people may be wondering, like what if I started today, what could I kind of finish and contribute within the short term? So, what kind of achievements do you think Volt's builders can reach in the short and medium term, such as within 6 months or so? I'll turn this over to Simon.
Yeah, so I mean, we obviously do kind of mention that number quite a lot. That there is a quadrillion of notional traded each year in traditional financial interest rate swaps, which is actually just cartoonishly large. Obviously, kind of the long term objective is to displace all of that and to have, frankly, that entire market going through Volt's protocol. But in the short term, there obviously we've launched kind of a number of stablecoin based pools. For those kind of really paying attention to the press release, we also talked about the fact that we'll be launching Lido based pools at some point soon as well, which means that obviously that'll be expanding from stablecoins and to ETH based pools. And then what that means really for builders is that there are kind of a bunch of kind of really kind of both interesting long term, but also like short term achievable ideas that could be built. One of those is building an LP optimization vault. So that's both kind of working out what tick ranges rather to deploy liquidity within, what type of leverage to choose, but then also potentially optimizing that across different pools as trading activity kind of varies across those different pools. So that's a really interesting opportunity for anybody kind of looking to get their teeth stuck into a project kind of immediately. Then alongside that, there's some other really interesting ideas around building a fixed rate vault. So it's like essentially an abstraction layer, which could actually also optimize across different stablecoin and ETH-based pools. Alongside that, we actually kind of recently put out an article explaining how someone could deploy a statistical arbitrage strategy to generate pretty significant APYs actually. And I kind of we talk about this in the labs team, but we could easily see that turning into some sort of Yearn-based vault or Yearn-esque vault. It wouldn't necessarily have to be on Yearn, where someone is deploying a strategy like that, and essentially abstracts away the complexity of the strategy such that other people can just deposit directly into a vault, which then essentially deploys that strategy through vaults. So that's another really nice kind of like interesting short-term idea. And then another one which has come up actually a couple of times now is thinking about the future of stablecoins and kind of what that looks like. There's obviously quite a lot of discussion around this at the moment. But there have been a few teams that have come through that have been looking at different ways of using vaults and rates of return which you can kind of achieve in an extremely capital efficient way, and looking at that and trying to explore whether or not that can be used as a form of stablecoin collateralization. So it's a little bit more complicated as an idea, and there's like various different ways in which that could be used. And we have two teams at the moment that are exploring that. But if there's anybody that's kind of really thinking, okay, like obviously we saw what happened with Terra. What does the future of this space look like? Can we use a different type of asset as a form of collateral? Well, there's actually a few interesting ideas banding around as to whether or not you can use an interest rate swap, and the fact that that's a derivative instrument, which is therefore capital efficient as a form of collateralization, which is pretty interesting.
Yeah, definitely. I mean, hearing you give all these ideas just makes you realize that we are really on the cutting edge here of such a breakthrough in DeFi and just finance overall. And we saw a couple weeks ago with the Volts Hack Money team on a community call. They demonstrated their projects, the teams behind Volts Liquid, EasyLP, and Leverage Yield. Showed some really impressive work, and they've been continuing to build, as to my understanding, over these recent weeks. Um, I want to hear a little bit about kind of the Volts Labs side of things, working with these Hack Money winners. What has the Volts Labs team learned from working with them, and are there any kind of lessons or pro tips that you can share for other teams that might be interested in hacking or building on Volts?
Yeah, it's almost funny actually thinking about it from our perspective because we there are some really amazing teams out there that come through and reach out, and at the point that they do reach out, we typically set up either a Telegram group or like a kind of a private chat in Discord, such that you get kind of like constant access to our team as you're kind of ideating on an idea. But thinking about it from our perspective, what we learn, we've learned that there are some incredibly smart developers out there, which obviously we knew already. But it's what's exciting is to see that those teams coming through and thinking of all these new ways in which they can incorporate Volt's protocol into an idea that they have. So even the few ideas that I kind of listed off a few minutes ago. Actually, this is one of the things that's so powerful about being a community and being open source is there's this phrase which I don't know if people have heard it, which is it's like for Web 2 businesses where people say some of the smartest people in the world don't work for your company. And that's the whole principle really of being open source, being a DAO, is that it enables everybody, wherever they are in the world, to be able to come in and contribute. And that is certainly playing out in terms of what we're seeing in terms of the teams coming through, starting to build on top of Volt's protocol. But yeah, in terms of tips, I just encourage if people have ideas, it kind of doesn't really matter actually how fully formed that is. Sometimes the earlier it is, we can actually ideate together, and that's actually quite fun and can help teams kind of with the direction or set the direction which they want to take. But the team's always here to support people looking to build on top of the protocol, and it's something which we expect to happen a lot more, and we want it to happen a lot more as Vault becomes this really low level primitive upon which lots and lots of new products and services are built.
Yeah, absolutely. It's really exciting. Just the openness of the protocol, the fact that anyone can pretty much come in and connect with the team and build a project that incorporates interest rate swaps, and build some quite groundbreaking stuff. I mean, anyone working on Volt right now is really, like I mentioned earlier, on the cutting edge of DeFi. So I think it's a good time to kind of demo the platform a bit. What do you say? I think we have maybe we can have Arthur demonstrate a little bit of the flows of the mainnet app and see it in action. How does that sound?
Sure, sounds good. Let's do it.
Yeah.
So let me just share my screen and let's just get into it. Cool. Can everybody see it?
Yes.
Awesome. So let's just review kind of the mainnet UI on top of which Volt's contracts are kind of operating. The first thing you would see whenever you kind of enter the screen is the trader pools page. And the trader pools page, what it effectively does, it displays all of the current kind of live and active interest rate swap pools. Currently there's 3 of them. So there's a pool on top of Aave DAI lending pool rate. There's a pool on top of Aave USDC lending pool rate, and there's also a pool on top of Compound DAI lending pool rate. So the variable APY is actually the block-on-block APY that we derive directly from the rate oracle, the Volts rate oracles that have been caching historical data from those markets. And then the fixed APR is the fixed rate at which interest rate swaps between fixed and variable rates can be initiated. So in this case, if we look at the ADAI pool, we can see that currently the variable APY is 1.8 and the fixed rate is slightly below, meaning that the markets are kind of like suggesting that the expectation is that the variable APY is going to drop according to this view. And then moving to the right, we can see kind of the maturity sliders for each pool, and which kind of which tell us the maturity date. And the maturity date is effectively the date on which liquidity providers and traders will be able to settle their positions and get their interest rate swap cash flow payments settled in their margin. So that's kind of like a high-level overview of the trader pools. Moving on, we can also jump into the LP pools page. So the LP pools is slightly different. So the data that it shows is effectively the same as the trader pools, with the main exception of the call to action. So in the trader pools, you are prompted to enter into an interest rate swap position, which could be either a fixed taker or a variable taker one. Whereas in the LP pools, you are prompted to kind of deposit liquidity, which will then be traded by the traders on the protocol. So you're effectively acting as a market maker as soon as you enter the pool. So if you're going left to right, the main thing that you would notice is the LP caps. So as part of our alpha launch, we have kind of decided to start with a set of caps on the amount of margin that liquidity providers can supply, and these caps only apply to liquidity providers. The margin deposited by traders is unlimited, meaning that trading activity can take place, at an unlimited capacity. So as soon as you're kind of on this liquidity pools page, you're then able to kind of provide liquidity in a given market. By clicking the provide liquidity button. So let's just try and do it for the Aave Itai lending pool rate. As soon as we click the button, we'll be able to see the card that enables us to create a liquidity provider position, which just summarizes the fixed APR and the variable APY alongside the maturity of the pool, and the percentage in here shows how much of the pool has already expired relative to the start date. So this specific pool was created on the 1st of June. So the first thing that we see on this card, so if I actually zoom in, is the fixed rate low and the fixed rate high. So these are input boxes that let us define the fixed rate range within which we are comfortable kind of supplying liquidity to both sides of the interest rate swap markets on that pool. So the analogy that I guess is the closest is the analogy that we would have with Uniswap v3, where you're able to provide liquidity in a concentrated manner by defining the prices within which you're comfortable trading. So in here, the fixed rate low is effectively the lowest fixed rate at which we're happy to enter into interest rate swap positions. So if you look at the fixed APR and kind of take a very naive and simple strategy of trying to construct our fixed rate range around it, we could set it to 1.2 as being the lower one and 1.8 as being the upper one. So usually when you're making the decision of kind of which fixed rate range you need to pick, there's a few important kind of variables that you need to take into consideration. So you need to think about the underlying volatility of that given interest rate swap market. So if you expect the variable markets to be volatile, then naturally it's likely that the fixed rates will also be volatile, meaning that in order for you to actually be able to enter into positions, you might need to define a wider fixed rate range as compared to a less volatile market. And in order to kind of like better understand those dynamics, I would encourage kind of like liquidity providers to look at historical data and historical volatilities to get a better sense of where the liquidity might land and where the rates might be traded. So as soon as you have kind of picked the lower and the higher fixed rate, you might have noticed that even though I provided 1.2% in here, the input box automatically got converted to 1.197%. The reason why this happens is that behind the scenes, fixed rates on our smart contracts are represented as ticks, which have a spacing. And the reason why we need this spacing is because we wanted to optimize for gas costs, and allowing for more granularity when setting fixed rates has a negative effect on the gas consumption. So we kind of had to balance it there. But you usually will be able to get very close to the fixed bound that you want. As soon as you pick the fixed rate upper and lower, you're then able to decide how much notional you want to provide. Let's say I decide to provide 10,000 worth of notional in that range. What this means is that I am, as a liquidity provider, I'm prepared to enter into interest rate swap contracts of up to 10,000 notional. As soon as I pick the notional amount below the input box in the trader information box, I'm able to see how much margin I have in kind of my account, which I've already kind of deposited before. And then I can see kind of the minimum required margin that I need to supply in order to be able to cover this deposit. So we can see that the actual kind of minimum margin requirement is much, much lower than the notional amount. Meaning that, in theory, I can enter into a highly levered LP position with a single asset being as collateral. And the reason why I'm able to do that is because as a trader or liquidity provider on the protocol, you're effectively trading the deltas, the differences between rates, meaning that you actually don't need the whole underlying to be able to enter into positions, and you only need to supply a small amount of margin while still being safe and being able to generate fees on your notional rather than margin. And another reason why you actually need to supply less margin than you would expect is because the duration of the specific pool is around 60 days, meaning that as a liquidity provider, in the worst case, you only need to cover kind of interest rate cash flow payments for only a 60-day duration, which by taking into account those dynamics and the fact that kind of interest rates are mean reverting and quite not very volatile in this specific market, we're able to achieve very high kind of leverage without much kind of safety cost to the protocol. And then, so as soon as we land on here, we're able to kind of provide an amount of margin which is higher than the minimum requirement. Once that's done, we're then able to kind of click the provide liquidity button and then kind of sign this transaction on MetaMask. And as soon as we have done that, we then need to wait for it to get mined on Ethereum mainnet. So the kind of the pending transaction box will display the pool, the fixed rate, the variable APY, as well as the notional liquidity amount you're providing in the underlying currency. In this case, is DAI, and the margin, kind of the raw margin that's kind of leaving your balance to kind of support that liquidity provider position. So now we just need to wait for a bit for it to get mined. Also, okay, so the transaction got confirmed. Now let's go on Etherscan and check the transaction. So if we click on kind of going to portfolio, I need to refresh there. Then we need to wait for a bit, and then once we've waited, we should be able to see our liquidity prior position. In here, I have a ton of positions which I've been kind of playing around with, but we should be able to see that like an example position. If you go on ADAI, we can see that there is 1,000 worth of notional in this specific pool. Actually, no, I think this is the pool we have entered. So in this specific pool that we have just entered, we can see that we have provided 10,000 worth of notional, 70 worth of margin in the range between 1.2% and 1.8%. And we can also see that the current fixed rate is 1.56. And the reason why it's displayed in green is because the fixed rate is currently within your lower and upper range, meaning that you'll be able to kind of generate fee income as traders kind of trade against your liquidity. And the cool thing about it is that your actual fee income will be a function of notional rather than margin, meaning that you're able to get much higher APYs relative to the amount that you deposit, given that kind of the fee income is proportional to notional rather than margin. Another cool feature here is that you're able to click on the transaction history button and see what exact transactions have been invoked as part of your interaction with Vault's periphery. So we can see that we have deposited 70 worth of DAI of margin and minted 10,000 worth of notional in the LP pool. If you look at some of the other positions I have, there's another one which I've created recently. We can see that even though I had around 51 of worth of margin, in the past week it already then generated $1.2 of USD of income. And the more trading activity there is, the more margin you're able to generate. And the cool thing is that initially I've only deposited 50 USDC worth of margin, but now I have 51.21, which has already been recycled back into my margin account and ready to be used for future positions. And then the same thing happens whenever trades are happening against you as a liquidity provider. So if as a liquidity provider you trade against a fixed taker and then a variable taker, what will actually happen behind the scenes is that this variable and fixed takers will get kind of merged together, and then your margin will then be kind of freed and recycled and ready to be used for future positions. So that's the kind of brief overview of the kind of the LP portfolio. We can see also on top that we can what positions we have, and a healthy position in this case is one which is within the fixed rate limit, fixed rate range. We also have our kind of net margin and net notional based on all of the below pools displayed as well, as a quick way for you to access your total LP data. So moving on, you are also able to go to the trader pools page, and then instead of actually providing liquidity, now you're actually able to trade. So if we, for example, go into our portfolio, then we should see what sort of positions I've already opened, and we can try and change the notional amount in kind of one of them. So if we stick to the kind of the ADAI pool example, then we can scroll all the way down to here. So we can see that there is already a position which was quite a long transaction history, where I've been kind of updating the margin, executing a fixed taker swap with various amounts of notional and margin updates. And now I would like to perhaps unwind some of that position. So right now I have 6,000 worth of DAI in this position, which is a fixed taker swap. If I want to unwind this position and bring the notional down, I'm able to do that through the trader pool screen. A few other things to notice here while we're on this page is that the swap card also shows us the block on block receiving and paying rate that we are getting. So the receiving rate in this case, if you're a fixed taker, is the fixed APR, the kind of the weighted average fixed APR that you have received from the pool, and the paying rate is the variable APY that changes block on block. So in this specific example, we are actually losing money because the paying APY is bigger than APR, meaning that the variable APYs are actually higher right now. So if we go back to the trader pools and pick the ADAI pool, we're able to enter into a fixed taker position, and just before we enter, it's important to note that there are a couple of toggles we have here that let us kind of customize our position. So if we choose a fixed taker position with leverage, that means that we're able to effectively express a short directional view on interest rate movements, meaning that we're able to lever up our exposure to interest rates and gain substantial APY in a scenario where the fixed rates drop below the current ones. The opposite is true for variable takers. So variable takers are able to kind of effectively express long views on the underlying rate movements, meaning that if you believe that, for example, in the next 60 days, the variable APY in this specific pool is going to go up by 1%, then if you enter into a variable taker position with 50x leverage, you can effectively get your return up to 50%. And that's how you would be able to kind of exercise the alpha or some knowledge that you have about the underlying markets and express that view in a way that's capital efficient and delivers kind of high APYs. So when you're about to make a fixed taker trade, if you want to do it with leverage, you need to specify the notional amount you want to trade. Once you've specified the notional amount, it will immediately kind of trigger the minimum margin requirement that needs to be deposited to cover this trade. In this case, it's 20.82 DAI. So if we do 21, we can see that we're able to kind of engage in a highly levered position in this case, whilst kind of still staying safe and being protected by the initial margin requirements imposed by the margin engine. So it's important to note that the minimum margin required is calculated by the margin engine of the protocol, which has been calibrated to derive this requirement by imposing upper and lower bounds on the APYs, which kind of depict worst case expectations we have for each side of the position. And they're built to be safe by design and to kind of not fail in 99% of the cases given historical market fluctuations. So if we click on trade fixed rate, and actually before that, we can check what the average fixed rate is going to be for us once we have done the trade. And this could slip if we want to trade a notional amount which is much higher than the liquidity provided in the market. We can also see the fees that we are incurring. In this case, it's 0.4 DAI. And the minimum margin requirement. So if we click trade, we need to sign the transaction. In this case, it's a fixed taker swap on top of the A DAI pool. So while the transaction is being mined, we can see that the notional amount we're about to provide is 10,000 DAI, and the margin that we're depositing as collateral to support our position is 21 DAI. So the main thing that we need to kind of keep in mind when engaging in kind of levered fixed taker and variable take positions is effectively the health ratio, and the health ratio is the ratio between the margin that you're providing for your position and the liquidation margin requirement. And the further your health the higher this number is, the further you are from kind of being liquidated. And if we kind of go back to our portfolio and wait for it to load, we should be able to see the newly conducted trade displayed in our trading transaction history. Let's just see. Okay, cool. So in here, if we zoom in and open up the transaction history, we should be able to see that we used to have 6,000 worth of notional in our position. We just got into another swap, fixed taker swap, at 1.56% fixed rate, and paid 0.43 in DAI fees, which pushed our notional up to 7,000. And our margin has also kind of increased accordingly based on this 21 DAI margin update. If we then want to monitor our positions, we can go up to the header of the trader portfolio screen, where we can see the net amount of notional that we have traded in both markets, in both variable and fixed sides. We can also see our net margin, as well as the net receiving and net paying rate. So the delta between the net receiving and the net paying rate tells us how much we are either gaining or losing, and the actual value that we're gaining or losing is going to be proportional to the net notional we are trading. So if we just go through our positions one by one, we can see that we have a variable taker position in the Aave USDC lending pool with 10,207 worth notional, 19 worth of margin, and the receiving paying rate delta of around 0.02%. And we can also track our transaction history. We can also see our fully collateralized positions. So this is an interesting one. This is a fully collateralized fixed taker position in the Aave USDC pool, where we can see that the amount of notional and margin is identical. But the main difference is that our margin in this case is represented in terms of the yield-bearing Aave USDC tokens rather than the underlying USDC tokens. And that means that when you're entering into a fixed taker swap, your variable liability, which you need to cover, is automatically covered by the yield you're earning on your margin. This means that if you supply your AUSDC as collateral, you're able to secure fixed rate of return on your margin without having to worry about the risk of liquidation. And the reason why you don't have to worry about the risk of liquidation is because you know that your position is always going to be fully covered by the variable yield earned by your USDC. So that's effectively the kind of the high level picture of the protocol, or rather like the portfolio screen. We can also see that for each card we have a healthy indicator, meaning that currently the margin that we have deposited into the account is above the initial margin requirement. If the margin were to drop below the initial margin requirement but be higher than the liquidation margin requirement, the indicator would turn into yellow. and then if it goes below the liquidation margin requirement, the indicator would turn into a red, meaning that you need to likely come in and deposit more margin into your account. And if you kind of fail to do so, liquidator bots who are kind of like running on top of the kind of the active Volts IRS pools will be able to pick up that position and liquidate it. And the liquidation results in a 5% loss of your margin and also causes your position to be unwound. So yeah, I would encourage traders to be more kind of thoughtful about their margin requirements and make sure that they're kind of always in the healthy territory. That is, I think, the flow of the Volts protocol UI. The main things, just to recap, is that you can go into the trader pools and you can pick whether you want to trade into a fixed or variable take-up position. When you're entering into variable take-up positions, there's an option to do a no levered trade. That only is possible in the fixed taker case, where you're able to define your notional amount, and then your margin is going to be the yield-bearing asset in that scenario. Cool. So I guess that's it from me, and that's a brief walkthrough of the current Volts UI.
Wow, that was fantastic. Thanks so much, Arthur, for leading us through that. We're seeing a bunch of questions coming in on the community call chat. We definitely want to get to those. We're also seeing people coming in who were at the Kudasai JP AMA. So shout out to you all for sticking through on the doubleheader AMA day. Before we get into the community questions, a brief note about the NFT contest winners. We will be posting those winners after this call. Those were winners who helped spread the word about the alpha launch and who shared episode 1 of our short animated series. If you haven't seen that, go to volts.xyz/studio. So a couple questions I just want to throw at Simon, give Arthur a little break after that amazing demo, and then we'll bring up some community questions. So turn it over to Simon. So obviously there's a lot of potential for building on Volts. What would you say to developers that are, kind of intrigued by the idea of integrating Volts into their projects, but they need that last bit of encouragement to dive in? What do you say to them to kind of get them over the line?
It's great. It's a great question. I mean, what is it that you've got to lose? I guess it depends what people are trading off in their own mind and kind of in their optimization of their own time, so to speak. But yeah, look, Volts is creating a brand new market in DeFi, and even if you just look at traditional finance as an example, it's such a big market because it's so integral to a well-functioning financial system. So if we want DeFi to become the financial system of the whole of the world, there are a whole bunch of products and services that are going to be built on top of Volts protocol. And anybody that's kind of involved now is involved super early. So it's a pretty exciting time to be involved. And the other thing is just to reiterate, I guess, some of the stuff that I said before, like as a labs team, we're always here to help people, kind of no matter how early an idea is. So if you do have an idea and you're kind of contemplating it and perhaps a bit unsure whether you want to commit to it or not, just feel free to reach out. We'll set up a separate chat, and we can just ideate through it together, and that could prove that it ends up being an amazing idea, or it could actually help you kind of like pivot into something else, which ends up being a really amazing and kind of exciting idea for DeFi.
Yeah, great. And Arthur, anything you want to add on just words you would say to developers who may be kind of interested into jumping on building on Volts?
Yeah. No, I think the main thing that matters is the developers need to appreciate the value, the impact, and kind of the use case that they're building. If the actual development and iteration and the building of it is, in my mind, is secondary. I think what matters is the developers need to understand what it is that they're trying to achieve and what opportunities Vaults unlocks for their kind of end users. And I feel like once the motivation is there and once the appreciation of the impact is there, then the rest is easily solvable. And as Simon mentioned, we're always happy to help with any kind of technical question or in the process of brainstorming the idea. So yeah, definitely motivation is key, and implementation is easy to sort.
Yeah, definitely. And as a side note, we are working on steps to kind of make our Discord more of like a builders community. So if any builders out there, have any ideas on things they'd like to see to kind of support their projects, please reach out to us and let us know. All right, one last question from me before we turn it over to the community. Simon, obviously today we're celebrating a big milestone, the alpha launch last week on mainnet. But I get the sense that you're not fully celebrating yet. There might be some milestones in the future which excite you a little bit even more than this one. So what big milestones in Volta's future will you really properly be celebrating?
Well, I don't know. This is a very big milestone, so we are definitely celebrating it. I think the thing which we kind of look to the future is, and I know that there's a few people which have heard me say this before, that London Clearing House is a entity in London. It's responsible for about 90% of the world's interest rate swap clearing, and within 5 years, we don't want it to exist anymore as an entity. We don't see any reason why that type of activity should continue to go through a legacy institution using legacy technology. Instead, we want it to all go through open source, community owned primitives, which in this instance we want it to be Vault's protocol. So that at that point, when London Clearing House no longer exists, that will be kind of a real big celebration, because it means that we'll have achieved something pretty awesome. But that's not to play down like the obviously going live on mainnet last week off the back of the community vote. Let's not forget the community voted to deploy the contracts. It's amazing that as a whole community we've achieved that, and obviously now the next steps are around kind of like growing the trading volume that's going through, kind of growing the markets, helping teams build on top of the protocol, that type of stuff. But going live was very significant, and we did it collectively as a community, which I think is the most exciting thing.
Yeah, absolutely. This is a big moment, and we definitely should celebrate, and that's what we're doing here. But of course, a lot to look forward to in the future. So I will turn over to the community questions now. We have some great ones coming in. I see that Math is Good asked a few. The first one might have been addressed briefly in Arthur's demo, but I'll still throw it out here just in case there's any additional notes, because I know a lot of people are thinking about this. So this is from Math is Good, asking, what resources are people here referring to determine the tick ranges? Is there any analysis/research on interest rate movements within DeFi, such as what happens when the Fed raises interest rates, market conditions, etc.? And I guess is wondering if that would have an effect on the tick ranges that people decide to LP for.
Well, I'll jump in, and then Arthur, you can jump in on this as well. So it's actually kind of funny. We did some correlation analysis just internally as a labs team, just to see kind of how correlated stablecoin rates in DeFi are to TradFi rates, and there definitely is some form of correlation. If people want to be really, really sophisticated about choosing their tick ranges, they could, if they wanted to, start build some sort of model based on that. I think the things which the majority of people are doing at the moment is just choosing tick ranges that aren't super narrow, but are narrow enough such that it will kind of capture the majority of trading volume for rates markets that, like, frankly, aren't particularly volatile at the moment. Stablecoin rates on Aave and Compound, they're not bouncing around between like 1 to 10% and back again over the course of a week. They are relatively stable. And I think the other thing which some people are doing as well is you can actually go look at the interest rate model on Aave and Compound, and you can see where the kink is. Which, just for anyone that's not familiar with that, the idea of those models is that it kind of optimizes or creates an optimal utilization level of the pool. And if the utilization of the pool increases beyond that point, the rates kind of start to sharply increase, which basically disincentivizes borrowers from going kind of beyond that point. And what that means is that you could, if you wanted to, you could start to look at that, see where the kink would be. That could sort of define some sort of upper cap, and you could use that as a way of thinking about what your tick ranges could be. That would obviously result in something which is quite wide. So I think the majority of people are actually doing stuff which is a lot more focused on kind of around the current rate, but with enough width so that you basically don't end up, or you end up with balanced trading activity, is the idea. Archie, I don't know if there's anything you add to that.
Yeah, I guess the main thing that comes to mind when picking tick ranges is, I think, there's a few variables at play here. So you just like some simple tips would be that if the duration of the pool is short, then the tick ranges need to be kind of naturally lower than for like a longer duration pool. And the reason behind that is because the expected volatility of the markets is much higher, and the expected uncertainty over the rate movement is much higher over a 1 year horizon versus a 60-day horizon. I think another thing to keep in mind, which is important, is the kind of the mean reversion of the rates. What I would do if I kind of were to provide liquidity, I would kind of run a back test and check kind of like what's the period of mean reversion for a given kind of APY series, and then kind of like align my fixed rate ranges alongside that. What has proven to work quite well for Uniswap v3, I think some teams like Visor Finance have implemented Bollinger Bands around price movements as a way to motivate the choice of your upper and lower ticks. I think something very similar could be done for Volts, where you effectively try and construct bands around the fixed rates, which are, let's say, like one standard deviation above and below the current rate. And then the deviation that you apply to those rates could itself be a function of time. So the longer you have to wait until maturity, the more you want to kind of safeguard yourself against kind of adverse activities. So these are like some of the main things that come to mind. What we're doing internally in the team is we're building out some kind of core backtesting infrastructure to better backtest these ideas and LP optimization techniques against historical data and against kind of stress-tested data, which is bootstrapped from historical data. And once we have more meaningful, more interesting findings, we'll share it with the community and to kind of motivate further research and development in the LP optimization space.
Yeah, awesome. And a lot of people are asking, where can they learn more? Are we planning on putting out some more resources? And the answer is yes. We are planning on rolling out a lot of educational resources to, kind of uplift all of our knowledge as a community and individually, of course. So if you are looking for resources, please know they're coming, and yeah, let us know what kind of things you'd like to see. Next, we have a pretty interesting question. I don't think we've seen this one before, and I'll again just throw it to both you guys. Any opinion on the impact on interest rates of Ethereum moving from proof of work to proof of stake, i.e. when people are allowed to withdraw their staked ETH? Is there any indication that would have an impact on interest rates?
Well, I think this kind of comes on to some of the next pools, or the next markets, sorry, is probably a better way of describing it, that we're going to be launching. So kind of for anyone that wasn't at the beginning of the call, we mentioned this in the press release. We will be kind of building a rate oracle for Lido. So we'll be launching kind of ETH-based pools where you can essentially speculate on what's going to happen to the Lido staked ETH rate of return. And then obviously kind of with the merge, which is well, no one knows when it's going to happen, but is inevitably going to happen at some point soon. This now then, well, Vaults now then provides you with kind of a protocol where you can take levered kind of views on what's going to happen to those rates over a period of time. I.e., you can long or kind of short the variable rate depending on what your perspective is on what's going to happen. But yeah, I think that's going to be a pretty interesting use case, given the merge is inevitably going to be happening sometime soon.
Soon indeed. Famous words. Another question now. We're going to move on to another questioner here. Lee666 asks, have you considered connecting to a layer 2 network?
I mean, Arta, I can answer briefly, and then feel free to jump in. So I guess the short answer to that is yes at a high level, but at the moment we're kind of really focused on building out the ecosystem on Ethereum, and there's kind of various different reasons for that. But just to, I guess, answer why we wouldn't kind of jump to an L2 straight away is that it essentially would just fragment or risk fragmenting liquidity across the two ecosystems, which would make it more difficult for kind of people to start trading, and make it more difficult for, I guess, us as a community to learn kind of which markets people are really excited about, and perhaps kind of ones which people are less excited about. So to begin with, we're kind of very focused on building out on Ethereum, but we will look at some point in the future around L2 scaling. Arta, I don't know if there's anything you want to add to that.
No, I think that's pretty much the same thing I was going to say.
Okay, cool.
Cool. All right, here's a fun question from Coin Junkie. Does the lightning bolt of the Volts mark have any meaning? I would say the short answer is it means LFG, but maybe there's some other kind of esoteric meaning there.
Arta, do you want to take this one?
Yeah, speed. I think speed is one, and maybe I don't know, Simon, but I think another thing that is kind of interesting to see, like a parallel between how volatile electricity is and electric waves are, and just kind of like we kind of seen an analogy in the markets recently, where effectively everything is very volatile. And what we're trying to do here at Volts is try and bring more stability to the space. That's perhaps another way to kind of think about that logo.
Nice, considerably more elegant than what I would have said.
Volts go boom. Yeah.
Look all go woo.
Yeah. So yeah, again, those asking for kind of more resources into maybe like even like an intro to quantitative analysis. Those are all things which we would love to share with the community in the future, and we're doing our best to crank out that type of content. Another question here. Any plans on opening LPs again? Everything seems to be working well. Will we see any sneak peeks of Volts updates in the next couple of weeks? That is from Sunstrike228.
Well, Arta, do you want to answer this? I can answer it if you'd prefer me to.
Yeah, so I guess I'll just briefly talk through. As part of the alpha launch, so yeah, we initially started from constrained caps of 1.5 million per pool. But as we progress further into summer and the alpha launch phase, we're planning to gradually kind of lift the caps and introduce new pools. Initially was more constrained caps, but eventually was lifted caps. And then the end game there is to fully remove the caps as soon as we are fully confident in the system, and it has been battle tested for quite some time.
Yeah, and just to add to that, if people remember, there was an announcement, obviously, to the community around the protocol going into an alpha state. And that happened, I think was an hour, if not a little bit earlier, before there was an announcement on Twitter and publicly and that type of thing. So if people are wanting to stay kind of really up to date and for when those caps start to open up, the best place to be is in the Discord.
Awesome, awesome. And so we have just a few minutes left here. Anything else you guys want to add on what's coming next in the future of Volts? What can we expect to see? What do you hope to see in the next community call for the next party?
Yeah, maybe just a few things. So we're obviously like super excited to be live on mainnet. There's obviously been a few requests for kind of educational content and that type of thing, which we're just for everyone, just so everyone's aware of it. We're working pretty hard on a lot of that type of content at the moment, and that exists all the way across the spectrum, from us producing trading strategies. I think there's one which we tweeted last week. So it's producing both. Oh, in fact, maybe I'm getting my days wrong. We tweeted it this week. But that's one end of the spectrum where we'll produce those strategies, we'll tweet them, we'll then eventually build out that strategy as well and make the code open source. And there's quite a lot of work going on around that type of thing at the moment. But then also at the other end of the spectrum, we're going to be kind of building out kind of educational material, explaining the way that the protocol works, kind of doing demos of the app, like what Arta did. All of that type of stuff to really help people get up to speed on the opportunities that are available on the protocol. And within that, if people have stuff which they'd really like to see, please kind of make us aware of that, and we'll work pretty hard and find ways to produce that and help you get up to speed.
Yeah, awesome, awesome. Well, that's about our time here. Thank you for the fantastic answers, the fantastic questions from the community. Just a big congrats to both the community and the labs team reaching this milestone, being launched on mainnet. This is just a big moment, and I'm sure everyone here is really excited for the future of Volts. So, thanks everyone, and LFG.
Thanks, Phil. Thanks, everyone. Bye now.
Thanks. Bye bye.
Bye.